Guys, what we know so far is that the market is in the bullish trend. There came an intermediate reversal. However, this reversal was not heavy to change the technicals, and then on Monday there came again a very heavy bullish movement, and this single bullish candle has realigned the market to its bullish trend. Now the question is whether the market will be able to hold its bullish trend, or if it will come down under its own weight. So this picture will be very much clear on Tuesday. Why Tuesday? Because on Tuesday, GS, the Goldman Sachs, will post its earnings pre-market. And because Goldman Sachs is a top contributor to the Dow Jones, this means that whatever will happen to the Goldman Sachs, it will impact the movement of the Dow Jones, and also it will impact the movement of the Microsoft. And whatever this the bullish movement you are seeing, or this the sustained movement you are seeing in the S&P 500, is all because primarily because of the Microsoft. And recently the Microsoft has made another all-time high. Now what is more surprising is that even though the market is heavy, very heavy, extremely heavy, but still it is sustaining, and it may sustain further. I repeat, it may sustain further. Why it may sustain? Because of the earnings season. So these all factors are supportive to the market. What is not supportive, or what may not be supportive to the market, is the PCE, or the core PCE data. However, this data will be published on 26th. So this means that there is still a lot of time. And then the FOMC, 31st. Okay, this means that these two factors which may go against the stock market, they are not in the picture at least for a week. So I will discuss each and everything, and these are the technical and non-technical factors, and there are more things that I am going to discuss in this, the S&P 500 weekly technical analysis. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis, which is for the week of January 16th. Means from January 16th to January 19th. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. So weekly chart means big picture, the hawk eye view. What has happened, what is happening, what will happen, okay, in the next 1 month or 2 months, 3 months. Okay. So this is the big picture, right? The second point of the agenda is the bond yields and earnings season. So I will show you the charts of 2-year, 10-year bond yields and the earnings, okay, earnings of the primes, and how these earnings may impact the movement of the market. Point number 3 of the agenda is the S&P 500 technical analysis on the daily chart. So weekly chart was the hawk eye view, the big picture. The daily chart is the short term picture, like within 2 days, okay, within 5 days, okay, etc. We will also analyze the technicals, and there is a special pattern, a very special pattern, and this pattern is indicating the market is going nowhere, neither up nor down. Okay, so I will discuss this here in the point number 3 and the point number 4. Now the point number 4 of this the agenda is the probable movement of the S&P 500 from January 16th, which is Tuesday, to January 19th, that will be Friday. Whatever is going to happen, whether the upward movement will be there or the downward movement will be there, and to what levels it will be there, and whether and what kind of movement we can anticipate on Monday, Tuesday, and so everything I will discuss in this the last point of the agenda. And guys, I recommend you to watch all of these the sections, because all of these the sections are interlinked, right? So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. So guys, this is the first point of the agenda, the S&P 500 technical analysis on the weekly chart. This is the weekly chart, W as in weekly chart, and these are the weekly candles, not hourly or daily candles, weekly candles. If you look into this, the last candle, it's a heavy bullish candle, and if you notice, the closing of this candle is above or is more than the high of the previous candle. So this clearly indicates that there are heavy or there are good bullish sentiments in the stock market. As simple as that. Okay. However, this does not confirm any gap up open or gap down open. Okay. This simply indicates heavy bullish sentiments, and through these bullish sentiments the market may sustain for some more time. That's it. This is the candle. Okay, now when we look into the technicals, then technically you can notice that the moving averages are bullish. Okay, fan out, and all of the technicals are bullish. MACD is bullish. Stochastic RSI, because of this small this the weekly bearish candle. Okay, we have seen a little change in the stochastic RSI. However, as of now the stochastic RSI is still trading in the bullish zone. Okay, so in some manner it can be considered bullish. Okay, then all other technicals and everything is bullish, bullish and bullish. So we can say that on the weekly chart the S&P 500 is like 90% bullish. On the weekly chart, 90% bullish. Okay, the picture is not much clear here, so which is why we will look into the Dow Jones. This is the Dow Jones. Okay, now in case of the Dow Jones, this is the red candle, and this red candle is much smaller as compared to the red candle that was seen in the S&P 500 on the weekly chart. Okay, and other than that the bullish candle, okay, again a good bullish candle. Okay, this is not as heavy as this the candle in the S&P 500 is. However, it is still a good bullish candle, indicating the bullish sentiments, because the closing of the candle is above the open price of the previous candle. It is indicating good bullish sentiments in the market. In terms of the technicals, clearly bullish, 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 bullish. Okay, stochastic RSI and the MACD, okay, all bullish. It is saturated and overbought. This thing is not seen in the S&P 500. So that is the change. Okay, other than that, on the weekly chart the kind of divergence is seen through the MACD. Okay, this is also a point of concern. Although it is supporting, or it is saying that the bull trend is there, but the divergence is too high and too heavy. So that's the point of concern. So how means how it is going to create a problem for the market. If you see that when such kind of divergence was seen, okay, back in November 2022, okay, this kind of divergence, heavy divergence, we have seen a bullish, bullish, bullish movement, then a bearish, bearish, two heavy bearish candles we have seen that within a week a very heavy, downward movement, and then only it managed to move up, but again it failed. Okay, so that is the problem. This thing is not much or not clearly seen here in case of the S&P 500. That is why if you have subscribed to my YouTube channel for last many months or years, then you know that we always look into the Dow Jones whenever the picture is not clear in the S&P 500. So this means that the Dow Jones is again 90 or 95% bullish. Okay, or again 90% bullish, but it is saturated and overbought. Okay, and the problem is with this the MACD. In case of the S&P 500, it is 90% bullish, right? However, the most important part or the most surprising part is that on Monday we knew that if the Dow Jones gives this kind of closing on Monday, okay, a heavy bullish closing, in that case the market is going to sustain. So this was my final update to my Patreon community members on January 8th, Monday. Okay, before the closing of the stock market, that the closing of the Dow Jones above 37,400 means the Dow Jones sustained at its moving average on the fourth consecutive day, and it was special because the Dow Jones gave a gap down open below moving average, but with extremely heavy bullish sentiments out of nowhere, the Dow Jones managed to close above 37,400, and this indicates that the weakness which was present in the market the last week means this is the red candle that you are seeing here, this is the red candle. Okay, so whatever the weakness was there, this weakness may be over and the market is expected to sustain further or to move up further. So these are the precise updates I give to my Patreon community members on the daily basis from Monday through Friday. Okay, so on Monday it was very much clear that if the Dow Jones gives this kind of closing, okay, and also if the S&P 500 closes above the zone, there is a very strong zone. If the S&P 500 closes above the zone, At the same time, Dow Jones closes above 37,400. Highly likely market is going to sustain whatever weakness was there. This weakness may be over. Okay, and now any downward movement will be limited. Rather, the market will sustain. Even if it failed to move up, then also it will sustain. So it was very much clear on Monday itself. Anyways, guys, so if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for these the daily precise updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. And guys, I would like to share the information regarding this the program. This is my stock market knowledge transfer program, or the S&P 500 knowledge transfer program. Through this program, I teach the technicals, hacks, strategies, movement, trend analysis, manipulation, technical predictions. So in simple words, I try to help people become self-reliant through the technicals, through the movement, so that they can predict by themselves, they can understand the things even before the things happen. And this is my email address whenever you want to participate in this the program, and this is the link to the Google spreadsheet where details are mentioned. And in this the Google spreadsheet, you will see in detail what I am going to cover, from the basics to the advanced, including the technicals in very detail, then the trend analysis, option strategies, and the support and resistance levels, and the manipulation, how to recognize the manipulation, how to understand the traps, and then the intraday hacks, short-term hacks, and the long-term hacks. So everything I cover in this the program. And so guys, this is my email address. Whenever you want to participate, you can simply drop me an email. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And the second point of the agenda is the bond yields and earnings. Okay. So this is the chart of 2-year bond yield. 2-year bond yield. Okay. Now what you can see here in the chart, that there is a continuous bearish movement. Okay, and the staircase format, staircase pattern, you can clearly see. Okay, so it is coming down and coming down. However, even after these many, okay, the red candles or this kind of movement, what we can see is that the MACD is still not bearish. Okay, so what it means? This means that if this pattern continues, okay, and I'm talking about the bond yield, I'm not talking about S&P 500 or Dow Jones, this is the bond yield. If this pattern continues for just for one day, Monday or Tuesday, okay, 1 or 2 days, in that case the MACD will give a bearish crossover, stochastic RSI is heavily bearish, everything will go bearish. The bond yield, okay, what does this decline mean in the bond yield? This decline means that the demand of the bonds is increasing or is heavily increasing. People are buying, not, I will not say people, I will say institutions are buying bonds. They are buying bonds heavily. That is why we are seeing the continuous and heavy there's a downward movement in the bond yields. Okay, now other one more thing, that 2-year bond yield, okay, it hit a high of 5.25%. okay, so this was the yield back in October 2023, and now the yield is only 4.14% or 4.15%. So you can clearly see a heavy decline from 5.25% and 4.15%. This simply means that if you have bought the bonds here, in that case you are earning an interest of 5.25%. But now if you go and if you want to buy the bond, then you will get an interest only of 4%. Okay, so in terms of the interest, you are losing money. And this is the US government bond, means the government is going to pay you the interest 5.25%, 4%. Okay, so this means so generally, okay, whenever the bond yield increases, this means that the market is anticipating, stock market is anticipating that everything is fine. Okay, and they are not looking for the bonds, rather they are investing in the stock market and they are making money in the stock market. However, when the situation is not clear, okay, there is a lot of uncertainty, confusion, and the market is fearful or market is getting fearful, in that case the demand of the bond increases. Okay, because they are looking for the safe haven. Safe haven is the government, because the government is paying you the interest and that is fixed. No matter So it doesn't matter whether the recession will be there or not, okay, or the economy will be good or bad. Doesn't matter. The government will keep you paying the interest. If it's 5%, then it will be 5%. You will get 5%. Okay. So this decline in the bond yield, okay, it indicates that there is a lot of uncertainty, okay, and people are moving, not people, institutions, okay, they are moving their money into the bonds. Now comes the earnings. So as of now, the market, okay, we have seen the entire market, okay, it managed to move up extremely heavily, okay, and this heavily or this heavy bullish push, okay, it was supported by, or it was given by, directly or indirectly, okay, by the Feds or the Fed chairman, okay, they have supported the bullish push or extremely heavy bullish push, and now this is the earning season. And generally, as I mentioned earlier, that generally, not always, but generally in the earnings season, market sustains, okay, or it goes bullish. Generally, it has no technical relevance. Sometimes we have seen that even in the earnings season, we have seen a decline in the market, okay, but generally, okay, like 70-80% of the time, it remains, it sustains, or it goes bullish, okay. Now, next week, Goldman Sachs, okay, and then after the Goldman Sachs next week, okay, there is nothing of much importance, but then next to next week, okay, we will see that some more companies are going to publish, post the earnings, especially the Microsoft, okay, we will see that Microsoft in the next to next week it will post its earnings, and then in the last week of January or the first week of February, the other primes, Apple, Google, Amazon, they will post their earnings. However, you will be surprised to know that the FOMC is scheduled for 31st, 30th and 31st of January. Whatever will be the decision of the Feds, okay, rate cut, pause, or whatever will be, okay, it will be on the 31st. And the Apple, Amazon, and Google, they are going to post the earnings on 1st of February. Okay, so it is always the earnings of these giants are always scheduled in this manner, that the earnings that you will find, or you will see that the earnings are posted just one day after the FOMC, okay. So, and historically we have seen that if there comes extremely bad news from the FOMC and the market have to give up, have to come down heavily, in that case the next day these earnings, the companies post the earnings and somehow the market sustains. So now you can see the chronology and how the market is designed and how the things are planned, okay. Anyways guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these the daily precise updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the third point of the agenda of this S&P 500 weekly technical analysis, and this is the daily chart, okay. So here I will do the technical analysis of the S&P 500 on the daily chart. Now daily chart means that the one candle represents one day, not 1 week or 1 hour. One candle means one day, okay. So the last candle here, it's a small bearish candle, okay. It may look green, but it's a small bearish candle, okay. But what is more important about this the candle is that it looks like a spindle, okay. It looks like a spindle. The spindle candles, okay, they are generally considered, they are seen as the reversal candles, okay, the reversal. So if the market is coming down, a spindle forms, then it gives a bullish reversal. If the market is moving up and a spindle forms, then it gives a bearish reversal, okay. Now this reversal may be intraday, maybe short term, maybe long term, it depends, okay. Now other than that, the previous candle, it was a red candle or it was a heavy bearish candle, okay. Now I will not say heavy bearish candle because there was a heavy intraday retrace and it closed in, or it looks like a hammer, a a bearish hammer, okay. Previous candle before that it was a bullish candle, and then a bullish candle, then a special pattern, okay. So this was the picture. So anyway, so this candle, okay, including the previous candle, it indicates that there are some bearish sentiments and the bullish sentiments are still there. So this is a combination of bearish sentiments and the bullish sentiments. This candle says, or this candle shows the indecisiveness or the confusion. It tried to move up, failed, came down, but it doesn't want to come down, moved up, and then up, down, up, down, up, down. Okay, this was the thing. So when this at 1:30 p.m. 1:30 p.m. Eastern time. So through these my daily updates to my Patreon community members on January 12th, I mentioned that if the situation doesn't improve, in that case the S&P 500 will keep on trading between this level and this particular level. Only 11 points, 12 points, only 12 points. It will keep on trading in between these the 12 points. For next 3 hours it will trade like this. So the candle indicates indecisiveness, confusion. Okay, it is neither moving up nor coming down. But yes, one thing is clear, based on the movement, based on the technicals and all, that the bullish trend is still there. There is no change in the bullish trend, especially after the formation of the slip. This was the bullish slip formed after the formation of this the candle. Okay, now when we look into the technicals, so the technicals indicate yes, through this particular pattern. Okay, there is a possibility of a gap down open, gap down open. This is a possibility, but I cannot confirm 100% that it may happen, because it is a long weekend. So whenever there comes a long weekend, then these the predictions, especially about the gap up or the gap down open, this may change. Okay, but whenever there comes a regular weekend, only Saturday Sunday, then we can say that yes, there will be a gap down open confirmed. Now the technicals. So the technicals, moving averages still bullish, clear fan out, bullish. Okay, Bollinger Bands and everything is clearly bullish. The MACD is still bearish. Okay, that's important. And stochastic RSI is bullish. Okay, and all of the technicals are fine. Okay, trading around at or around the saturation, but still bullish. So this way we can say that the S&P 500 is 80% bullish. 80% bullish. Okay, not 90 or not 100, because the MACD is bearish. Okay, and that's the important point. MACD is bearish. So it is 80% bullish, fine. Okay, but there is one more thing. Okay, and this is especially related to this the candle. Okay, the candle was on January 11th. So what is special about this candle? Number one, the candle itself. Okay, it's a bearish hammer. Okay, generally whenever the bearish hammer, okay, it forms, it indicates a change. But this bearish hammer you can clearly see here. So this bearish hammer you can see here in case of the Dow Jones. Okay, so this is a perfect bearish hammer, and because of the formation of this bearish hammer, okay, in the Dow Jones and also in the S&P 500, we have seen that Dow Jones on Friday, okay, it gave up, it came down, means it gave a gap up open. Okay, it is struggled, it came down. The same thing it was seen in the S&P 500. However, S&P 500 managed to breach a level which is here. Okay, that is why it was suspicious, that is why it was suspicious and looks like, okay, that it can move up further. Okay, but then it gave up, and then this kind of movement. So the bearish hammer I am talking about, the bearish hammer. Okay, the S&P 500 came down, it sustained at this particular level. So what is so special about this particular level? This is not a level, it is a zone. It is a zone. And even in my previous S&P 500 weekly technical analysis, I have mentioned the zone, that there is a very heavy zone. And on Thursday, January 11th, we have seen that the CPI data was published, and this time the CPI data was against, I repeat, it was against the stock market. That is why I mentioned negative news for the stock market, negative. Okay, only the core CPI, it was neutral. Otherwise, everything was negative for the stock market. This means that it doesn't matter, okay, that where the open will be, but either initially or after some time it will come down because of the profit booking. This condition was clearly mentioned in my pre-market update on January 11th, that we can expect a profit booking in the entire US stock market on that particular day. And if there comes a heavy fall through the profit booking in the entire market, then whatever the bullish movement we have seen in these 3 days, this kind of bullish movement or this kind of trap, this trap will be justified because they knew that this is going to happen. That is why they gave an extremely heavy push and then this has happened. However, I was like 99% certain, and the same I mentioned in my pre-market update to my Patreon community members on January 11th, that no matter what, any fall, any heavy fall, extremely heavy fall will be limited to this particular zone. This particular zone will be able to handle the fall, and when the market sustains here at this the zone, then we will see a reversal back to these the levels. Okay, so our level, so the closing of the S&P 500 was just 2 or 3 points or maybe 4 points above our level. Okay, but it was, as we were expecting, that if the S&P 500 sustains here, then intraday we can expect a good retrace. Okay, but maximum to this the level. Okay, and the S&P 500 and the entire US stock market will come down only and only if this zone is out, or if the market breaches the zone. That will be the only case when it will come down, and in that case it will not come down just minutely. No, it will come down heavily. Okay, so this was very much clear on January 11th, okay, in the pre-market update and in the subsequent updates. So guys, if you are also looking for these the precise updates from Monday through Friday every day of the S&P 500, and it's not just about the precise updates on the daily basis, but it's also about the stock market opportunities. I gave minimum 5 to 10 opportunities every week, okay, to my Patreon community members. So in order to get these stock market opportunities and the precise updates, you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon profile, this is my Patreon page. And on my Patreon page, you will notice that there are these two tiers or two levels. As such, there is no difference in these the two tiers or two levels. The only difference is the geographical location. So whenever you subscribe to either of these, then you will get the daily S&P 500 precise updates, analysis, probable movement, as well as the stock market opportunities, minimum 5 to 10 every week in the premium stocks of the US stock market, top 30 companies or top 40 companies of the US stock market. Those are the premium stocks. And guys, if you notice that many people have joined my Patreon community for last many days, weeks, months, and they are getting these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stock. So whenever you want to join my Patreon community, I've given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the fourth and the last point of the agenda of this S&P 500 weekly technical analysis. And in this, the last point of the agenda, I will give you the probable movement of the S&P 500 from January 16th, which is Tuesday, to January 19th, that will be Friday. So next week, only on Tuesday, I think pre-market, before the open of the market, the Goldman Sachs, okay, is going to publish its earnings. Okay, and recently we have seen that the banks, JP Morgan and Citibank, Bank of America, Wells Fargo, they have posted mixed results. Okay, anyways, Tuesday and the movement after Tuesday, okay, we can say that Goldman Sachs will influence that movement. So let's see on Tuesday. But if you are my Patreon community member, okay, then we will analyze and pre-market, and also in the first update, the picture will be very much clear. However, as I mentioned earlier, that we are not manipulators. We do not control the movement of the market. That is why we stick to the technicals and the levels. Our technicals and the levels, they work perfectly. Okay, they have always worked, just like this one, a reversal, just like this one, a failure at here. Okay, so levels and technicals will work, and you should stick to these the levels and technicals. Okay, Middle East. So recently we have seen Israel, Palestine, and the involved, and then some other countries. Okay, they involved in this, and now more and more. So this situation is escalating. Okay, this is the Middle East situation. It is escalating. Okay, and again, we do not know what will be the outcome. Okay, whether it will keep on escalating, or okay, or if there will be something else. Okay, but yes, what we know is that certainly if this the situation escalates further, then it will simply override the technicals, the levels, the manipulation, the earnings, the economic data, everything, the facts. It will simply override everything, and then that escalated situation will force the market to go heavily bearish. But these are the factors, okay, which are beyond our control. That is why we will look into the technicals and the levels. That's it. Now these two candles, okay, bearish candles, confusion but bearish, okay. The big picture is bullish, okay. So bullish bearish means confusion. Dow Jones, Dow Jones, the same picture, okay. Two candles, bearish, but in case of the Dow Jones, the picture is more clear, okay. The picture is more clear in a manner that the moving averages never came close to a crossover. The moving averages came extremely close, and at the open on this particular day there was a confirmed crossover, but then intraday heavy movement there formed a slip. However, in case of the Dow Jones, this situation was never there. It was sustaining and is still sustaining, okay. So this combination is bearish, but overall the trend is bullish. Bearish, bullish, bearish, bullish, okay. Bearish, bullish. So this means that overall there is a confusion in the market, clearly a confusion in the market, and this means that market is not going anywhere, neither bullish nor bearish, and whatever movement is going to come, at least on Monday, it is expected to be limited, okay. First of all, we are expecting a gap down open on Monday, a gap down open on Monday, because of the formation of this pattern in the Dow Jones and the S&P 500 and in the Nasdaq, okay. A gap down open, but again, okay, it is not 100% confirmed, because it's a long weekend, okay. That is why I'm not confirming 100%. If there comes a gap down open on Monday, okay, or irrespective of any open on Monday, if the S&P 500 comes down, then what we know is that there is a very heavy, extremely heavy zone, okay. Now the moving averages are almost at the zone, okay. So S&P 500 is not going bearish, will not fall, will not go bearish until and unless the S&P 500 clears the zone, okay. This thing is very much clear, 100% confirmed, okay. No fall, no heavy fall, nothing, unless the S&P 500 clears the zone. Now in terms of the moving averages, we can say that once the S&P 500 gives up the moving averages, closes below the moving averages, okay, then also it will fulfill the same purpose, the same condition, okay. And once it is seen there, then it will be coming down. Now it will be coming down to what? It will be coming down to the previous close of the previous low of the candle, okay. Low of the candle was 4682, 4682. Only and only if, or only or only and only when it reaches the 4682, it will be coming down further, else it will sustain, or not sustain, or we can say that else it will keep on trading between 4682 and the zone, okay. That's it. 1%, no, just more than 1%, okay. This will be the zone, and it will keep on trading up down, okay, in this the zone. This is the downward movement, okay. And if there comes a proper downward movement, proper fall, in that case the reversal cycle, okay, it will kick in, and then the reversal cycle will push the S&P 500 towards 452737. This is the golden support level, okay. It will sustain there at this zone, and so on, and as of now we are anticipating that any reversal cycle will be up to this the zone, okay. So this was about this was okay, to this side, the bearish side, okay. And the picture will be much more clear on Tuesday, okay, pre-market, when the Goldman Sachs will post its earnings, okay, and how the market movers are going to look into the earnings and what they are looking for, okay. Or in the first hour at 10:30 a.m. Eastern time on Tuesday, January 16th, okay, it will be very much clear. And if you are my Patreon community member, then in the first update I will clear that what we are looking for, or what the market is expected to give, okay. Now in the bull side, what we know is that the all-time high of the S&P 500 was 4818, okay. This was the all-time high, okay. And also let me disclose the number, okay. This is generally I give to my Patreon community members, okay. 4790, this is the resistance, 4790, okay. So S&P 500 will not be able to move up, will not be able to hit, breach, okay, or make a new all-time high unless it sustains at 4790. And in my daily updates, okay, whenever the S&P 500 is trading around 4790, then my Patreon community members, then I inform my Patreon community members that S&P 500 will not be able to move up or hit or will be able to form a new all-time high unless it sustains above 4790. And this means that if the S&P 500 keeps on struggling or failing at 4790, then most likely or highly likely the 4790 will not allow any more bullish movement in the season. Season means this time in last few months and this month and so. And whatever S&P 500 has gained or attained or may attain just above 4790 will be the high of the season, right? So this means that while everyone is anticipating, okay, and the S&P 500 is very close to the 4818, everyone is anticipating that the S&P 500 will be able to hit and reach. Okay, this is subjective. This is subjective to 4790. Okay, and one more thing, if you have subscribed to my YouTube channel for last many weeks or months, okay, I have mentioned clearly, okay, with this the 100% confidence, 37,600, it will remain in the picture no matter what. 37,600 in the Dow Jones will remain in the picture. Okay, so this means that the 37,600 will still be relevant. And if you notice, the closing of the Dow Jones on Friday was below 37,600. Okay, so this itself indicates some weakness. Okay, one more thing, that if you look into the pattern, if you look into the recent movement of the Dow Jones, okay, then in some manner it may look like consolidation. In some manner it may look like consolidation. It is consolidating with a limited up down movement. It is consolidating. So this means that if the Dow Jones is truly in the consolidation, this means that the S&P 500 is not going to give up or is not going to move up heavily. Okay, and also it won't come down heavily. Whatever the movement will be, it will be like within 2%, 1 or 2%, and that's it. Okay, so yes, 4790 I was talking about. So now the picture is clear that the S&P 500, once it sustains properly above 4790, then only we can anticipate a movement towards 4818 all-time high, or it may form a new all-time high. Okay, when I say properly sustain, this does not mean 10 seconds, 1 minute or 2 minutes. Generally most of the people, they trade with 1 minute chart or 5-minute chart. No, I'm talking about hours. Okay, 2 hours, 2 hours or 3 hours. Okay, minimum 2 hours. Okay, but generally we go for 2 to 3 hours. That is a proper sustained movement, that it is sustaining above 4790 for 2 or 3 hours. This means that yes, now there are chances that it can fulfill, or it can hit, or it can reach and form a new all-time high. And if you see that on December 28th, it moved up, failed at 4790, came down, and a reversal. So on December 20th also, I mentioned to my Patreon community members, 4790 is important. If it fails at 4790, it will be coming down. Then again we have seen that on Wednesday, January 10th, it hit exactly 4790 and retraced. On January 11th, Thursday, it moved above 4790, failed, and then closed. On January 12th, Friday, it moved above, failed, and then it came down. That is why 4790 is important. In the bearish side, we have the zone. Okay, so there is a zone and the moving averages. Okay, so unless there comes a closing or two closings below the moving averages or the zone, we cannot confirm a fall. So what does this mean? This means that we can anticipate a movement between the zone and the 4795 or 4790. Okay, up down, up down, up down. Okay, or not exactly in between, a little breach can happen, just like, okay, on Friday it moved to 4802. Okay, but we are looking for a sustained movement so that it can be confirmed that it can move towards 4818 and can form a new all-time high. But a failure, again, it failed if it fails to sustain them. So this means that we will say 4790 and the zone, okay, or the zone of the moving averages, and that's it. A little breach still can happen, okay, but again we will be looking for the sustained movement. Now, a breach or not a breach, a sustained movement in either side. A sustained movement in the bull side means 4818 or beyond, okay, a new all-time high. A sustained movement or a struggle or a failure at 4790 means it will be coming down. But whether there will be an extremely heavy fall or not, it will depend on these moving averages and the zone that is there. This zone was always there. This zone has again and again, we have seen that the S&P 500 again and again has struggled at the zone, okay, on December 20th, 20th on December 20th, it gave up heavily. Then it tried to move up, then again it failed. Then it tried to move up, then again it failed. Okay, so whatever is happening around the zone. That is important. Okay, similarly, whatever is happening here in case of the Dow Jones, it is happening around 37,600. So this is again important. 37,600 in the Dow Jones, okay, and the zone in the S&P 500, right? So this is there. So unless there comes a proper and a sustained movement either above or below the zone, okay, we cannot say that to which side the market is going to move up, okay, or to which side the market is going to move, okay, up or down, right? In the bull side, a new all-time high, okay, if it happens, if the S&P 500 manage to sustain at 4790, moves up at 4818, okay, and we breach and forms a new all-time high, then we can anticipate more bullish movement. However, there is one very heavy, extremely heavy resistance level in the Dow Jones. I need to check the level exactly. What level is that? Okay, in terms of the numbers. Okay. But I think either here or means somewhere around here it is there. Okay, so this extremely heavy resistance level, okay, it says that any movement beyond 37,600, or in case of the Dow Jones, will be limited to this, and then this is expected to be the high of the season. Earlier we were anticipating that 37,600 or a movement around 37,600 will be the high of the season, and as of now we have seen, or we can see, that the Dow Jones is struggling, okay, around 37,600. But if in case if it is able to move up, then the next resistance level, okay, it will struggle there, okay, heavily. Similarly, in case of the S&P 500, okay, after 4818, okay, there are some more technical levels, okay, that I will disclose on the daily basis if it happens to my Patreon community members, okay. Otherwise, this is the case. A fall, no fall will be there, no heavy fall will be there, okay, or any fall will be limited to the zone. Only a breach and a sustained movement below the zone or closings below the zone will force it to come down further, and then any bearish movement will be limited to 4682. Okay, and after 4682, it will regain its the reversal cycle, okay, and then then we'll be looking for 4527, yes, 4527 and 37. In between 4682 and 452737, we have 4600, how much was that, 4620 something. This is the first Fibonacci retracement level, okay. So technically this means that 4620, and the S&P 500 may get a reversal from 4620 because it's a Fibonacci retracement level, okay. Losing 4620 means a direct landing to 452737. And whatever is going to happen on the daily basis, okay, like limited movement or more or less movement, okay, I will keep you posted through these daily updates if you are my Patreon community member. But if you are not my Patreon community member, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. So guys, hit like if you have liked this video, and if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. So guys, this was my S&P 500 weekly technical analysis for the week of January 16th, means from January 16th, which is Tuesday, to January 19th, that will be Friday.